closing beat, everybody. Happy Monday. How you doing out there? We got an all new closing beat coming at you. So we're likely to mess something up today. So we started just a little bit early just to kind of get rolling here. Hope you enjoy it. But you're not here for the looks. We'll of course go over all that stuff as we go. You're here to learn about the market. So I hope to be able to do that for you today. And she's blurry. Why does it do that? That's a little bit weird. Anyways, we'll go over the stock market here and see what we can do. It should just pick up on my face eventually there. No? There we go. So it may go in and out. That's kind of weird. Let's try something. Go like this. Maybe it's a little dark in here. It's a little cloudy today. But anyways, we're going to move on with that. Don't worry, it's safe. Hey, okay, so we're gonna go through this here. It'll probably just pop out in and out blurry on me. I don't know why that's doing that. Sorry to take too much of the time here, but we'll see what happens. Anyways, we're gonna go over the stock market here, see how things went for the day. We got this sort of different setup. We'll cover it as we go. And our jazz artist of the week, by the way, Miles Davis, we went with this week. Miles Davis. Wouldn't be right. We got to start with Freddie Freeloader as a song there. If you never listened to Miles Davis there. Sort of the godfather of modal improvisation. So we'll cover some Miles Davis as we go throughout the week. But I want to focus on the markets here today and show you what we got. So you got the, well, this is a little different, honestly, to look at it this way. You got a small rally in the Dow. You got a small rally in the S&P, a little bit better in the NASDAQ, and the Russell 2000 was your big gainer there, right? The Russell 2000 was by far the biggest gainer out of the group today. People going back for small cap, going back after the action there in the Russell 2000. Banks and REITs were all the excitement there. Biotech a little bit as well, but it was mostly banks and REITs in the mix there. You had the Dow as the lowest gainer on the day. Let's go over the charts, just take a look at it. You got the Dow as the laggard on the day today. You did have, in the Dow, you had Boeing kind of stick out there, almost a 4% gain on the day. You had Goldman Sachs financials helping them out there, almost 2%, and American Express almost 2% as well. So in the Dow, you had the financials as we have not seen recently, so it's nice to see that. Remember last week we started off with a bang, couple day rally took us up 10%, and then all of a sudden we faded away into the end of the week. And that's okay. So we had a little bit of a fade as we begin this week. Of course, people saying, wait a minute, maybe I'll go for financials. I'm not sure there. So we'll see. The S&P 500, you got a little bit over the 200-day moving average. It was sort of a timid rally today, to just as easy as I can put it there. China made some decisions about buying our agriculture products overnight. That stopped any attempt at a rally overnight. And then throughout the day, it was kind of like, all right, well, the Fed's helping us out. The economy's opening back up. Earnings weren't so bad. Yeah, there's a lot of protests and stuff going on, but the market just shook it off, whether you're, whatever you believe about that. And so that was basically what we had. If you look, we had the sort of similar to what we saw the other day, where the weaker stocks have been the leaders. So for example, like Coty, C-O-T-Y, great pop today, great reversal actually off that one, up 20%. Gap, it's a retailer that's been rather weak lately. Norwegian Cruise Lines, right? Go figure. Norwegian Cruise Lines a little bit higher. You had some of the airlines higher today, actually all the airlines higher today. And so it was another one of those days where stocks that have been historically or weak in the midterm saw the strength today. We saw that last week as well. All the weak stuff was showing the strength. All the strong stuff was showing the weakness. Today that wasn't technically true though, because you did have some stocks that were strong that just had news related to them. Norton LifeLock would be an example of that. That's actually new highs, counting in its split. But there were weak stocks that were also weak today. So it wasn't 100%. I won't spend a lot of time on that because that wasn't technically as accurate this week so far. We'll see. But yeah, by and large, the market's just focused on sentiment and everything. The Fed put money in there. And by the way, I've got some sentiment. I can actually show you that. Let's take a look. This was during the recovery from the virus. Well, you can actually see. So if you look in the background there, you got the orange is the S&P 500. This was from April 23rd, where the market was starting to recover off this low here. And the AAII does a survey on investor sentiment, and 50%, right smack on the dot, 50% of the investors surveyed were bearish. Well, that was back in April. Now the stock market's moved up even higher, and less investors are bearish. Go figure that. So we've actually moved back down to a point where we haven't been since the rapid decline during the virus low. So now, technically, 42% of you guys out there are bearish. The rest of you are saying, okay, almost a 40% rally off the lows. I'm bullish. So we'll see what happens there. But I thought that was rather interesting to see the bearish sentiment actually declining. Usually you see a slight uptick when the markets get a little extended like they are, but we did not. So that was that. Hey, in our Fin Tips show, we're doing two different Fin Tips this week. The audio is a little off. Sorry about that. We're making a change here and everything. But we talked about how to scan for stocks to invest in. Went over a specific scenario today. The audio only drops out when I'm showing the screen chart, which was an extra thing I was adding, but feel free to check that out. We're also doing how to look for dividend stocks, and in particular, how to pick them based on volatility. So we're going to go over some examples there. And then on Friday, we're going to talk about tax brackets with a real basic thing. For our customers on Thursday, our Wine and Wealth class will actually be on the stock market portfolio update. We're actually going to do some forward-looking research and everything for you guys, so we'll take a look at that. And one last thing before we go over to the sectors, let's look at the charts here again. Remember at the beginning of May, I said, well, Bank of America's got an interesting turn on this sell in May and go away thing. They said, yeah, that works, but don't do it in an election year. And so we actually shared that data with you, the S&P's 500 forward 6-month performance starting in May during an election year. Of course, this is an election year. You guys know that. And actually, the best 6-month period follows the potential sell in May and go away. So the June to November time period. So if Bank of America is going to be right with their data, and this is their data that we just borrowed here, I guess. But if they're right, then June through November in this election year should actually be a fairly exciting time period. It's not a lot, 6.73%. We've seen that in a matter of a couple of days lately, but if that happens to be the case, then maybe this is not one of those 6-month time periods where you want to sell and go away. All right, let's go over to the sector break. What happened? Oh.
We're back on the screen. Look at the chart.
Oh, okay, cool. So the Prologis PLD was one of the symbols there, and those are the ones that people have been focusing on in the REITs there. You got healthcare. So healthcare in general just can't make up its mind. It was the weaker sector today, down 1% on the day. Can we do the charts on the other one? That one there? Try that one there. Does that work? Ah, okay, so at least we can see the charts. All right, see, we learn, we grow. See how fast we adjust? Healthcare down 1% on the day. Now, this, to be fair, today was a little bit misleading because you had Pfizer. So if you look at Pfizer, a pretty nasty day for them, down 7% on the day. They're in phase 3 of a clinical trial for breast cancer, and they don't see any significant improvements or reason to continue, it sounds like. That's not good. By the time you get to phase 3, you've spent a ton of money, a lot of hours, a lot of legal paperwork, a lot of trials and everything, and if it's not looking good, that's usually a bad sign. For Pfizer, a 7% move is a huge move for that stock, and because of that, that held back the sector overall today, which looks like it's trying to break out. This is a great example, by the way, of risk to reward. You think, oh man, look, healthcare is going to break out. Where's your target? It's just right up here. So from a technical perspective, it's not really that exciting, because if you're buying something and taking the risk of, I'm willing to risk $5 to make $3, most people will pass on that trade for now. So healthcare, a little bit odd there. You've got consumer discretionary there, kicking a little bit, about 1% gain on the day. Most of it is going to be because of Amazon. Amazon was up 1.17% today, and Amazon makes up 23% of the XLY. So if Amazon has a good day, then that's going to be a good day as well. But don't forget, and don't rule out Home Depot. This just went to new 52-week highs just the other day, after lows, remember. So Home Depot, if that gets kicking in on a given day with Amazon, those two make up basically, what is that, 23, 33, 35-ish% of the consumer discretionary space there. Also, Morgan Stanley went to Amazon, or upgraded Amazon today. I gave him a $2,800 price target. Says that 2020, this year, 2020, is going to be the year of e-commerce, the e-commerce consumer, that people spend less on experiences, even though they will travel, they'll be buying a lot more stuff online. And Amazon, obviously, no need to tell you about their direct benefit there. And tech stocks, we talked about that a minute ago. It was the 10th one that could have been positive on the day, but was not. And that was largely because of Microsoft. Microsoft just couldn't get anything going today. It was a sleepy day for Microsoft. Microsoft is one of the bigger holdings inside the tech space, and that's that. If we take a look at gold, there we go. Gold lost $1.40 today. It's hovering around the 1750 area, closed out 1750.60, right in there. It's just bouncing back and forth. Very bullish chart. I've said this every day, looking pretty good. Just quiet for the moment. So taking a bit of a pause. Silver, not pausing by the way, nearly making it back to these prior highs. Silver's just been on a tear since it's gone above the 200-day moving average. If you happen to be playing along with silver. Anything else? Yeah, everything else was pretty quiet today. Just a slow, timid start to the beginning of the week, sector-wise. So that's that. Technical breakdown, if you want to talk about that for a second. We've got 21 new highs, which is creeping higher. Remember, we had 15 on Friday. We were 8 the day before. 15 new highs. If we look on the charts here, you've got the same names that have been there. You got Electronic Arts, hit 52-week highs, but it pulled back. Dollar General, same thing. Hit 52-week highs, but it pulled back towards the end of the day. eBay again, but same story. Crown Castle International, same thing. We already talked about that. Slight pullback there. You got some new names, not new, but back to the list. You got Carrier also, but that finished near highs. Brute strength there. I've been pointing that out every day to you. It's impressive. And Autodesk killed it. Autodesk, very good. I believe that was earnings related. Breaking to highs there. Volume picked up as it broke to new highs. That's always a good sign if you're a bull. It's also a good sign for the end of the day that maybe it won't float back lower if volume hits higher as you break those highs, like volume's increasing as you hit those highs. Well, there was one new low, but the one new low is sort of asterisk. Edward Life Sciences, it did not fall that much today. It did lose money on the day, but it wouldn't have hit a new low. This is a 3-for-1 split, and so it hit this new low radar. It's not technically a new low, so we can move on there. As far as stocks, technical patterns you might want to be looking at there. Still a watch list type building market or a stock pickers market. We know about that, but it's kind of like a, hey, let me build a watch list and see what happens. Domino's Pizza broke to new 52-week highs out of that range we've been talking about. Did pull back, so it's not the way you want to see it get off and running, but we'll see what happens there. Xilinx, we talked about it kind of coiling up around the 200-day, maybe going to break above there. Risk to reward solid on that one if it does break out. And then Micron, I think it's way early to decide on this one. 3 shots at moving above the 200-day moving average, unsuccessful. If for some reason it gets going again, you got to believe that the bears are going to give up on that one, I would think. So that's that one. A couple other charts, and then I'll take your questions. You got Zoom, new highs today. Actually, new all-time highs for this one. New since IPO, everything. Up 13% over $200. They're working on the security enhancements to make your streams more secure. You know that's been an issue for them. And then I pointed out the cruise lines and things like that. Beyond Meats. Beyond Meat's had a good day today, up 8% on the day. They've got a deal with Yum China to put either the burger, the Beyond Burger, or the burger meat in Yum China's Taco Bell, KFC, and Pizza Huts. Yeah, so you might be able to do that there. That's obviously good news for them. And Zynga in the news, you might have saw that today, up 5%. They're buying out Peak Gaming. I think it was like $2 billion. I don't have the notes here. Earnings-wise, you got Cracker Barrel. Cracker Barrel is going to report tomorrow. You got Dick's Sporting Goods, a few other retailers as well. Zoom in the mix there, and then your dividends coming your way is going to be Lind, and I think that's about it. Oh, Enpro. Enpro's paying out 26 cents. That is today. Yeah. So that's that. I'll take a chance here and try to answer your questions. See what I can do. Ooh, that looks good. I like that, man. What do you think of the new layout? The audio is actually coming from here. That's a work in progress. So it's not, usually it's right here. So it's like right in front of me. It's a little further. We'll get there. I love it. You like the Boeing above the 150 there. Yeah, Boeing, it really seems to be holding its own there after breaking through that little downtrend. Looking pretty good there. Very good, very good. You like the different sectors there. I love it. You like Dave and Buster's. That's a tough one. I don't know if I fall for that one. That is very sensitive and very aggressive, I would say. How do they make money? Those games are, they make money by packing as many games as they can in there. Those games are not very far apart. I would be nervous about that one. I would be nervous. Karma's looking for $200 on Boeing by the end of the year. A little excitement. Get those 737 Maxes back in the air. Maybe that could be the case. Yeah. You see any significant moves higher in velocity or trading volume on individual stocks? Yeah. Stock market? No. Yeah. You like Tesla because of SpaceX? That was exciting for them. That was very cool. I had a good time watching that. That was motivating. I don't know how far it goes because of that. I don't follow that. No. I mean, it's exciting. Yeah. I think it's cool. Thanks to me, you started a Roth. Nice. So you started a Roth, got to work. I love it. I love it. How did the riots and stuff affect the markets? Well, it's kind of obvious to see today. The markets sort of look the other way, and I don't mean it in a bad way. I think and I said today the markets had like a timid rally. It wasn't a aggressive, very exciting type rally. It was very slow and steady. And I think the riots don't really affect the markets in general unless they hit Wall Street themselves. But in general, we're looking at strong. An economy trying to reopen again, the Fed supporting every last ounce, which, by the way, we know now what ETFs the Fed was buying, the bond ETFs there. So, yeah, riots don't really affect it. I mean, if for some reason it keeps affecting Target, Amazon, Home Depot, or things like that, those stores have to be shut down. All right, maybe that has a slight impact on those individual names, but not the market. Or for some reason, maybe the president does something. I don't know, maybe it gets out of control, but as of now, no. Nope. Are hotel stocks a discount? They're not only a discount, they're going to be tough to kind of hope that they continue. I see I did a thing this weekend, drove up and down the beach just to see. Everything was packed. I mean, it was typical summertime action. So, yep, technically, yeah, still trading very much so at a discount, at least looking back over the last couple of years. Yep. I saw that and ARK said that about Tesla because they own it. That's one of their bigger positions. So, if I had that much attention on me, you think occasionally I wouldn't be like, hey, that stock looks good. I think it's valued at something much crazier. So I don't know if there's anything wrong with that, but that is the case. Yep. You don't buy a stock, so you're asking about Pfizer. You don't buy a stock after just the first day of it either falling or rallying. Give it a minute. And I should say it like this. You don't try to go against the stock on the first day of a big move. So if it falls, you don't try to be the first to buy it. If it goes up, you don't try to be the first to short it, is what I'm saying there. So give it time to settle. That was a big drop today. Yep. Anybody's guess on how long healthcare stays in the range there? It's been a little over a month now, going on 2. Yep. Oh, no doubt, Ashish, that the stock market is at least somewhat reflected by the Fed's comments and actions. Yeah, it used to not be the case, but nowadays, I guess that's what they want. Yep. Oh, yeah. I do agree that there will be some, if not many, hotels that will be unable to continue by the end of the year. It's not exciting, right? So if it'd have to be like a Choice Hotels or a Marriott or something, but if it's like a smaller brand, I don't think you're going to hear about it. There's lots of little mom and pops down here that not opening. Yep. Oh yeah. Do you think the markets were irrationally high considering all the are irrationally high? I think it's an exciting pullback. I think we've had an exciting pullback or rally in the market after such a drop there. I don't know if it's overdone or this is just crazy that we recovered so fast. If you remember, the Great Depression did the exact same thing, which I don't know why you'd remember unless you studied that, so I'm sorry I said that. But the Great Depression, you had that 25% drop out of nowhere, and then basically it recovered right away before starting the long, drawn-out, multi-year drop. So maybe that's the case, you know? It's not abnormal what the markets have done. But if it gets back to highs, I would say, yeah, that's very abnormal. I can't believe that happened. That's unbelievable. But we'll see. I saw the comments. I mean, come on. If you're China, you have to throw that in there, right? I mean, we give them all this grief about not handling, you know, Hong Kong and the riots there, which I didn't say it, but, you know, our government says it and wanted to get their hand in that. You got to imagine they can't throw that. Yeah, you throw that comment back at it. We deserve it. You deserve it. I like it. I thought it was kind of funny when I read it. How do you know which? Well, we know now what the Feds have bought. I believe it was 12 different ones. The bond ETFs. Remember they said in their last round of purchases they were going to actually use bond ETFs, sort of a new thing for them. You can actually look them up now. We know which ones they are. Yeah. I don't know on Bitcoin. I mean, I see that it rallied today. It's been sideways like a lot of things. I don't follow Bitcoin. Yeah. I love it. Well, I will just be grateful that nothing went wrong too bad here. We got everything set up. We'll keep dialing it in, giving you a new layout, new idea. We'll see what happens, and you guys enjoy the rest of your day. I appreciate you guys watching. If you like the new layout, let me know in the comments below. And I appreciate the comments on the things that we can adjust still to make it better. Trying to make it better every day, and there's a lot more coming, by the way, with all the stuff that we can add into the mix now. So I appreciate you watching, and have a great day. We'll see you.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.